Hello and welcome to the FF News Virtuarena. I'm your host, Doug McKenzie, and on today's very special episode, we're going to be looking at how fintechs can help people save their finances in this extraordinary time. We've had a couple of years with lockdowns and now going into an energy crisis and a cost of living crisis. And so fintechs, as they stood up in 2020, are standing up again to help millions around the country and the world. And joining us here today, we have two guests right at the heart of this transformation. We have Jinesh Vohra from Sprive. Jinesh, how are you doing?
I'm doing well, thanks. Thanks for inviting me.
It's an absolute pleasure having you on. And Jinesh, could you tell our viewers a bit more about yourself and Sprive too?
Yeah, sure. So my background's in investment banking. I was at Goldman Sachs for about 14 years, then decided to jump ship and leave the corporate world behind and started Sprive with two other guys. And yeah, we've been doing that. We launched last year, have about 10,000 customers. I'm sure I'll tell you more about Sprive throughout the conversation.
Absolutely amazing. I mean, some of those numbers already are absolutely brilliant. So that's great to hear. Thank you so much, Jinesh. And also joining us, we have Rich Logan from PPS. Rich, how are you doing?
Oh, I'm very good, thanks. I'm very good. Yeah, no, doing well.
Amazing. Thank you so much, Richard, for joining. Could you tell our viewers as well a bit more about your role at PPS and PPS2?
Yeah, of course. So I'm the solutions director at PPS. I've been at PPS for quite a while now, probably 8 or 9 years. So it's developing. I've been in the payment industry for around a decade. So yeah, looking forward to talking more about PPS in the context of this conversation.
Yeah, I mean, I really do feel like payments have facilitated a lot of the change that we're going to be talking about. So I'm going to be absolutely fascinated to hear that decade-long transformation that you've seen from that, Richard. So Rich, to set the scene then, if I stay with you, how did fintechs step in or step up at least and help people if we look back maybe 2 years when the lockdowns were certainly a lot more fierce and strict here in the UK?
Yeah, I mean, there are really a number of different ways, and obviously there is a real breadth to the number of fintechs that we have in this space, which has meant that we have a number of things to choose from in answering this question. Some examples for how fintechs really stepped in to help people during lockdown. I mean, we have a few within our own portfolio. So, for example, one of PPS's partners, Tide, adapted to help its small customer business base. Or sorry, I should say small business customer base during the period, responding quickly to the government's bounce back loan scheme, and with some financial support from PPS, within a few weeks, Tide had become an accredited lender, lending from about £2,000 to 25% of an SME's annual turnover, and that was up to a maximum of about £50,000 for up to 6 years. So you can see that really helped some of the businesses struggling during the pandemic period. On the flip side, we had, on the consumer side of things, one of our other customers, Sainsbury's, providing the well-known by now vouchers for meals during lockdown, which helped a wide range of people, especially children, during that period, which was a really big win, I think, for them from a perception perspective during the time. So really, there are a number of things like that really allowed fintechs to step in and show the world what they could do really in terms of helping people during lockdown. I think one of the other things that really helps, just as a broad comment, is that the fintech experience is typically quite an agile one, is typically quite a seamless one, where people were stuck at home. They didn't have the convenience of being able to go into physical branches, to go and see their banks. And so providing people who may not have had that ability with an online experience that really changed the way they could interact with their financial providers, I think was a big win during lockdown.
That's just absolutely fascinating. To start off with your first point, talking about the speed to enable an organization to start lending. I mean, previously that would have been a similar kind of time frame for someone to get access just to lending, and now you're being an enabler in that sense. And then also on the digital experience side of things, it only takes one time to be amazed by a digital experience to leave going to the branch behind. So it's almost that kind of like domino effect, I can imagine, when it comes to embracing digital technology. So that's absolutely amazing. And Jinesh, I've also got to get your perspective here too as well, please.
Yeah, I also think pain points help. So I remember during COVID, there was long wait times trying to get help with traditional banks because you couldn't meet them face to face, and they just didn't have the infrastructure to be able to kind of support their customers. And so people then start looking at alternatives, and obviously with digital propositions, and especially like the neobanks, etc., it's very simple and very quick to sign up. And so you can kind of see why they did so well during the kind of the pandemic. And a lot of people are on working from home, and so they're on their phones, they're on their computers, and so it was a good time to actually even market to that kind of user base, because they're spending more time on platforms like social, and so kind of really targeted messaging to the right kind of audience really did wonders for the fintech community.
Oh, that's interesting. Yeah, looking at that kind of public awareness side of things, would you say that 2020 to 2021 was the golden year of fintechs to actually gain that public consciousness?
Yeah, I think so. I think you look at a lot of the numbers, and there was good growth numbers for fintech apps during that period. I think there's people who are maybe less inclined to use technology services, and the pandemic just kind of forced the issue. They were looking for solutions to problems that they had, and they came across these either through kind of word of mouth or through kind of like direct marketing. So definitely been kind of a really strong time for fintechs. And I think the other thing is like even like simple things like video calls, that was kind of like people who just never actually kind of got in touch with technology, but they had to if they wanted to see their friends and their family. And that's just kind of the stepping stone, because once you get comfortable with something like that, you might get comfortable, and it's not quite fintech, but even just ordering your shopping online, when historically you've gone to the to the kind of the grocers in house. Suddenly you're starting to get more and more acquainted and comfortable with technology, and that just kind of helps to kind of bring fintechs closer to helping more people.
Yeah, I completely agree. And looking at that subsection of people that, for instance, as you mentioned, would have been relying on groceries being delivered, and now because payments have become so embedded and so quick to just send off, people no longer have to subscribe to these kind of meal on wheels type situations. They can actually, as you mentioned, just get instant groceries sent to them by Deliveroo or Uber, because the payment is so easy. And that's just going to change so many less able-bodied people's lives. So I love hearing these human stories, but I mean, we've kind of alluded there to how payments were such a big part of this journey. So, Rich, how important were digital payments when it comes to enabling this? Do people even think of a payment?
I think people don't want to think of the payment, but I think, touching on a couple of the points Jinesh raised, we saw the fastest growth in adoption of digital payments in those jurisdictions with the most stringent lockdown measures. And I think we talk about some of those people who may have been maybe less able to access these services. Yeah. We actually saw in a lot of fintech verticals the proportion of low-income households and women and people who potentially hadn't been served quite as well by digital means in the past were actually served far more during lockdowns and during the pandemic than they had been prior to that. And from my perspective, the ability to help those underserved groups better during the pandemic links back to that digital nature of the fintech delivery model. So, for example, using mobile phones to reach underbanked populations was a key lifeline for some of those people who may have been cash dependent prior to the pandemic. Now, if you go back to digital transactions specifically, or digital payments as a whole, interest in contactless had been growing and has been growing for a long time, even prior to the pandemic. But as consumers increasingly demand that speed, that frictionless journey and convenience to enhance their purchasing experience, social distancing meant that surge just happened far more quickly in contactless and digital application. I think we've seen a number of studies, the Forrester study, for example, which saw for about 40%, just under 40% of consumers now lean towards doing all of their critical needs contactlessly. Nobody wanted to be touching the PIN pads, from petrol stations to filling up the air in your tires to doing any of your transactions. And that number has just really jumped up 20% in a single year during that period. So really growing twice as fast as any of the non-contactless transactions in the grocery or pharmacy categories. And we see that being, from what we hear from MasterCard, for example, that changing rapidly across many jurisdictions. 19 countries were involved in that study, and about 80% responded that they're using contactless payments anywhere they can. So you can see really the adoption is massive.
That is absolutely incredible. Such a revolution in such a short space of time, enabled by changing regulation, culture, and tech coming together to really facilitate change. Now, guys, that we have covered, I think, quite nicely 2020 to 2021, but 2 years on, we're now facing a cost of living crisis. So Jinesh, I always love getting these new use cases that some of our viewers might not have heard of. What are some of the alternative or maybe even entirely new fintech products that are enabling people and their businesses to thrive through this difficult time?
Yeah, I mean, I think open banking is really kind of key. If you think about cost of living crisis, it's tough for a lot of people in terms of how to manage their finances. They've got less money in their pockets. Obviously, they want to still live their lives. And what open banking obviously allows is greater transparency in terms of how you're kind of spending your money. And I think that's kind of really key. And I think some of these open banking apps that I'll mention have been around for some time, but through this kind of crunch, they're getting more and more targeted in terms of how they can help people, because with the data that you have, you can be highly kind of personalized and contextual, and so as they've created the foundations, and then you can kind of really kind of take things to the next level, because a lot of these fintechs are so agile. But Snoop is a great example of an app that I've used, and I just love what they're doing in terms of just giving people hyper personalized recommendations on how essentially you can save money. And obviously you still got to live life, you still got to do your kind of your day-to-day your day-to-day expenditure, etc., and they do things through content, education, as well as kind of like these kind of in-app cards that they send through, etc., that kind of are just really relevant to your personal circumstances, so that you're not just getting ads trying to get you to like do things that you wouldn't normally do. It's actually really understanding your financial situation and finding ways of helping you save money, which I think is just really, really important in the time that we're at, especially given the crisis. And then there's obviously budgeting apps, and there's so many out there, and so it's difficult sometimes to know which ones to use, so you can get a better handle on just kind of where you're spending money. And if you're wasting money, they talk about subscriptions as an example, kind of just building up, and before you know it, you're spending much more than you need to. And now they've made it so much easier to kind of cancel subscriptions. So you've got apps like Clio and Emma, who are just getting better and better at just kind of helping people with not wasting money, which I think is super important. But also budgeting. There's Nova Money, which maybe people haven't heard of, but it's an up and coming fintech, where you set your financial goals, and then it kind of really coaches you in a very gamified way.
Oh wow!
Essentially, help you meet them. And so I think open banking has obviously been really, really important. And then there's obviously debt that people unfortunately are kind of racking up. When you find tough times, people tend to borrow more for longer. And so obviously Sprive is an example where we're helping people pay off their mortgage debt. Unfortunately, in the UK, more and more people are having to borrow more for longer just to be able to kind of have a roof over their head. But that means you're paying a lot more interest over the lifetime of your mortgage, and with interest rates rising, it's compounding, right? So you not only got cost of living crisis, but you've got now rates rising really, really rapidly. And so, where you might be paying, say, £150,000 in interest over the lifetime, very quickly that might double or even triple depending on where interest rates go. And obviously that's really, really scary. And so, like, our app is using open banking and AI to kind of help people find extra cash, to kind of help them pay down their mortgage, and the amount of interest you can save is just incredible. I think the average Sprive customer right now is on track to save £10,000 in interest and pay off their mortgage 4 years earlier, which is really, really
that's incredible,
impactful. But then also we're adding new features like Shop with Sprive launched last week, where you can do your everyday shopping. So you can do a weekly shop at Morrison's or M&S or Waitrose, or we just agreed a partnership with Sainsbury's, which is coming soon, and as to next year. So you just do your everyday shopping and you get extra cash to help you pay down your mortgage. So just by doing your shopping, you could potentially be mortgage free 6 months earlier and save like £4,000 in interest. And so we're just trying to find more and more ways of just getting people to kind of get in control of that debt that they've got outstanding, because it can be stressful for people with rates rising. And even through like chipping away, you can do things like, without getting too technical, having more equity in your property. So improving your loan to value situation, which means that when it comes to you next refinancing, you're in a better position to get cheaper deals. And obviously that, even a few percentage points here and there can make a huge difference in terms of the amount of money you can save.
That's absolutely amazing. Jinesh, we actually need you to kind of write these down into a list for us so we can get through this cost of living crisis and then try each one of those apps. That's absolutely amazing. And Richard, I've got to get your thoughts too as well on some of those brilliant ones.
Yeah, no, absolutely. I mean, look, we're clearly super happy to be supporting Sprive in this, and I think the timing is absolutely perfect for a product like Sprive in the market at the moment. I think there are a lot of things, and Jinesh touched on borrowing. I'd like to touch quickly on on one of our other customers, Moniz, who on the topic of borrowing and providing a credit builder functionality for their consumers who are typically, from an underbanked model anyway. And that really allows them to kind of get their credit scores up to a level they need them to be, with banks tightening on the amount of lending that they're providing people, especially those with maybe questionable credit scores, and giving them that inclusion is super important. I think when we talk about a few other examples, obviously Jinesh has touched on a few in the wider market. I think sometimes it's great just to talk about controls as well. In terms of cost of living, people need to be really, really careful on where they're spending their money. Saving things is super important, but also in being able to restrict the amount of money you spend. And I think digital wallets and being able to set specific spending rules against your particular saving pots are really important for those people who may want to go out and have a good time, but limit the amount of money they can spend in a pub, for example. You don't necessarily think so clearly after a few beers. And I think sometimes going, I know I'm not going to be able to spend more than X amount tonight, gives you that reassurance that you're not going to wake up in the morning regretting the fact that you haven't got anything left for the rest of the week or the month. I think it's also worth mentioning gift cards. Obviously not a new concept, but I think the mechanism behind vouchers and gift cards, even though they've been around for a long time, have found a lot of new applications during both the pandemic and now as well, in being able to really restrict down the amount of money that can be spent at a particular point in time. I think we spoke earlier about the supermarkets and the way they provided help to the disadvantaged children during the pandemic. I think that kind of thing equally applies during cost of living crises, where there may be less going around, and so supermarkets joining forces with fintechs has really allowed that kind of delivery to the underprivileged sections of society to be able to continue to go and get their shopping, for example.
This is absolutely amazing, guys. And I've got to also add another one. One credit ladder, for instance, where people who can't get access to mortgages yet because of their credit score, being able to use their rental payments to offset that. And I think that's very exciting. So, I mean, we've heard so many different ones here. It's actually hard to pin, one. I'm not going to say a winner, but one to focus on. But just hearing that is absolutely incredible. But Jinesh, you've spoken obviously a bit about Sprive just then. And also you've spoken about how it's not just a cost of living crisis, we're going through an interest rate crisis as well. Some mortgage lenders actually even halted deals after the pound took a tumble a couple of months back. So do you think we're going to actually start seeing, for instance, new mortgage products off the back of that? I know a couple of years ago, some banks were looking at kind of pairing mortgage rates to, for instance, parents. So people could get a better rate. Are we going to see more of that innovation?
Yeah, I mean, I definitely think, obviously, the kind of the situation that you mentioned was a pretty crazy time in terms of, I'd never seen anything like it, where just deals were being pulled left, right, and centre. And obviously, you can understand, given it was just the cost of borrowing just kind of risen quite, rapidly, and so no one really knew where interest rates were going to go. And obviously, banks and lenders need to make money, so they had to kind of pull and reprice. And obviously, really unfortunate for homeowners who unfortunately had mortgages that needed to kind of get refinanced, or they were they're buying their first property. I mean, the good news is that it kind of is now stabled with the new Prime Minister, etc. So that's obviously positive to see. But I think if you take into context the kind of the macro kind of interest rates rising and the cost of living crisis, I think you're seeing more innovation, especially in the people looking to buy kind of their first home, because it's harder and harder to kind of save for a deposit. It was hard enough as it was because property prices were rising, and salaries essentially haven't been relative to what we're seeing in terms of the value of homes increasing. So we are seeing generation homes, a good example, which your listeners may have heard of, where they're essentially doing exactly what you said, where family members can essentially boost your income, so that ultimately you can kind of meet the lender's affordability criteria. So you have a better chance of actually getting that kind of that first home.
Step on the ladder.
Yeah, exactly. You've got On Ladder, which haven't launched yet, but they're building a really innovative product where essentially they're helping essentially fund a big part of the deposit, and then providing really flexible terms to pay down that deposit over time throughout the kind of the lifetime of the mortgage, and they're not charging extortionate interest rates either for that privilege, which I think is important as well, because what you don't want is to people suffer financially because they're taking out loans that they essentially can't afford. And then I come across like Pathway Points, which is a really interesting company. Again, haven't yet launched, but very close to doing so, where you can essentially rent and find a property and rent, and through your rent, as you pay it over time, you're essentially building equity in the property, and so at the end of like 25, 30, 40 years, you essentially own the property, which I think is a really interesting proposition. So we are seeing innovation there. We're also seeing, like, I was at the Fintech Talents event yesterday and listening to some of the kind of more traditional players like the building societies, etc., and even they're thinking about how can we change things up. So obviously there's things you can do in terms of like 50-year mortgages as an example, but do you really want to do that and get people borrowing into that length of period? Probably not. 3 million people already expected to have a mortgage past the age of retirement, but they are looking at things like can the generational kind of wealth help in getting people access to a mortgage loan. So I think you're seeing sometimes the traditional sector looking at what's happening, what the fintechs are doing, and kind of thinking, actually, maybe we need to start getting into this space. So it's a good example of where we're kind of leading the industry.
Fascinating. Then with that in mind, then Richard, now that we've heard from Jinesh there, how the traditional institutions are looking to cherry pick some of these ideas, fintechs have always been at the forefront of innovation. So how can they better use payment data to go on and enable their customers to look out after their finances more and more effectively as well?
Yeah, I mean, clearly I can't pretend to be an expert on the mortgage economy like Jinesh, but I think the start of the fintech boom was an optimistic time for the economy, and that translated into a boom in services that empowered consumers as a way to grow and manage their money with things like trading, neobanks, buy now, pay later, loans, that kind of thing. I think today's opportunities are emerging to help consumers survive those list of challenges, and I think those tough times have often led to innovation in the space. The use of payment data specifically, to answer your question, really just helps fintechs to grow their consumers' confidence in spending money wisely. And I think businesses typically rely on that data to build their strategies to move forward. It's not limited to fintechs either. I think when we talk about all players in the space, anyone who's really building payments into an embedded experience rely on that data to kind of move forward, understand the behavior of their customers, how that changed during difficult times, and help them to improve not only their customer service, but also the success of their products. We see this in the traditional retail environment as much as we see this in breakthrough finance. I think, Jinesh, I'll speak on your model for a minute, but the idea behind Sprive was really to help people find spare cash and reduce their debt by putting a few things aside to help reduce down their mortgage rate. Now we have other products that are similar in that sense, to looking at niche ways to help customers save. We've got a number of customers in our backbook, like for example Rookie operating in Germany, who are helping try to drive use data to help drive spending insights for the younger generation. So for Gen X, who at the moment are really, really being squeezed at the moment. So I think those kind of things, really helping young people or underserved people during these periods are massively important, and data is behind all of that, really.
Yeah. I mean, I think it almost a slightly overused phrase is, data is the new oil, but to be able to action that when we're seeing kind of investment rounds dry up slightly and do more with less is going to be absolutely critical. And I guess, Jinesh, if we could come to you when it comes to obviously the partnership between PPS and Sprive that Rich was just touching on there. Can you tell us a bit more about it and how you guys work together to really enable both of your customers, to utilize their data effectively too?
Yeah, sure. I mean, PPS is core to our proposition, and it's a great great partnership. We're really happy with everything that they've done for us. In terms of how, maybe talk a little bit about how the app works and in terms of and in the context of PPS. So open banking is an enabler in terms of helping us kind of set aside kind of the money in terms of how much to set aside based on the rate of spending. But ultimately, the physical movements of cash is where PPS comes in, and ultimately holding holding the money. So the way it works is we collect money from the bank account that they essentially link via open banking, and we sweep that to a Sprive e-wallet account in the customer's name, and that's all powered by PPS. And the beauty of the app is with one tap, you can essentially make overpayments to your lender and get the benefit of paying off your mortgage faster and saving interest, and that's all facilitated through faster payments through the PPS infrastructure. And look, in these tough times, you never know what's going to happen with your finances. So, your boiler could break, you might need the money. And so you might have this inclination that, I want to overpay on my mortgage, but unfortunately you need the money back. Well, with one tap, you hit withdraw in the app and the money goes back to your bank account real time. And again, we leverage PPS's infrastructure for that. So really, really kind of, important in that you are able to facilitate these payments really quickly. I think time is key, and with faster payment rails, obviously everything's real time, and so that's kind of really, really fantastic.
Yes. Now, now that payments are going at real time, it's a hard time for the institutions to try and catch up and deal with everything from fraud, KYC. So it's amazing how much investment has to be put into payments, rails, and everything like that. But I'm going to put a pin in that conversation for now, because we're going to focus on the consumers. And Richard, I'd like to come to you and kind of look at how we've been kind of talking how customers can better equip themselves for a hard time, but I like to see how consumers can actually achieve more control in their spend and actually almost thrive in this challenging time.
Yeah, sure. It's a quite a tough question, really, because I think consumers all have different kinds of behavior. And when we ask how do they give themselves more control, I think one of the key things is looking to expand their use of products outside of their traditional financial products, which, whilst fundamentally important, don't often allow the same level of dynamic control as some of the fintech products. And we're seeing in the market, there are new credit management strategies, robot advisory service, and customers continually finding new ways to gain control over their finances. In terms of doing more with them, I think that really comes down to education. And we have a lot of customers who are providing, really in-depth education during the payment experience. And I think things like, today's buy now, pay later products, for example, they're really allowing customers to spread the load of some of those bigger purchases that are quite difficult. At the same time, we have customers who are providing really in-depth payment insights, for example, showing how and where consumers have spent their money over the last 6 to 12 months, which allow them to build up their own management strategies of their funds. And again, we mentioned some of the B2Bs, and I think it's super important to mention those as well. Providing access to loans, providing quicker payment solutions to pay suppliers and avoid late payment fees. Those kind of things are super important. When customers have control of their finances, the next logical step for fintechs is to help them do more with their money. We see B2C fintech becoming increasingly popular because of those insights, allowing you to track your spending, monitor your investments, and compare the types of cards that you can access, which gives customers more of a one-stop shop for things related to their personal financial management. I think if we touch on a few examples in the B2C space, it's not just showing people how they can do more with their money from a financial perspective. It's also where they can take that, across the board. So we'll touch on many of those, I'm sure, as we go through the questions. But things like Echo, for example, providing customers with a view of their carbon footprint. These things are just as important to people in controlling morally how they spend their money, and not just how to make the most of it.
Yeah, and that's it. A whole new value add is, we're so tied up with thinking about our finances as just the money in the bank. But actually, if you think everything comes back to making a payment, you can look at your ESG score, as you mentioned. You can look at your loyalty scores at certain brands, as we've talked about. But there's so much more behind a payment than just the transfer of money, and being able to hear this value add is very exciting. Now, Richard, as well, we talked very early on in the start of the conversation when we were talking about lockdown, how people moved to the fintechs because suddenly they had to embrace digital technology, digital experiences, and the retail banks with you couldn't get access to them. So on the flip side, are we going to start seeing this with all this uncertainty? Are we going to start seeing fintech customers actually return to traditional financial institutions? And also, do you think the role of fintechs versus banks is changing now? Do you think that we're actually seeing this collaborative approach between the two?
It's a great question. I think often from our experience, we see that rather than wholesale leaving the traditional financial institutions, people have been using both. And I think whilst we will see people continue to hedge their bets and stay with some of the traditional financial institutions, we will also see fintechs gaining pace alongside them. And I think normally people will have a primary account with a traditional bank. They'll then look at their specific needs and interests and create some side accounts with fintechs or neobanks, which may then become their primary accounts. If, for example, I mentioned Echo, if we have consumers who care about the environment, which is becoming an increasing topic of conversation even during these difficult times, then they'll go for a program that supports green finance. Echo is a great example of that. Or if they need to support their children and the spend for their families, they'll go for a program like Rookie that I mentioned earlier. We have a number of cases of people who can't open their first account at traditional banks. So those people wouldn't necessarily be going back to them because they were never with them in the first place. And so if their first banking experience was with a neobank, they'll probably see those as the type of people they continue to stay with. And Moniz is a great example of that. Suits Me is a great example of that. People who are providing support for the underbanked, whether those are young people, whether they're diaspora, people who've moved into the country from outside and so have struggled to open traditional banks. But I think more broadly, outside of the consumer model, what we're seeing in the market is a lot more overlap between those traditional financial institutions and with the fintechs. And I think they're starting to see that working together allows them to use their strengths to build on that consumer experience. And I think over the next few years, we'll see a lot of those traditional financing institutions working much more closely together with some of the fintechs. One of the things the fintechs have often struggled with is time. And you mentioned the difficult investment world that we're in today with funding drying up a little bit in certain areas as people become a bit more reluctant. And the fintechs struggle with having time. The traditional financial institutions don't. But the fintechs don't struggle with speed and adjusting to the challenges of any particular environment, whereas the traditional financial institutions do. And so I think we'll see a lot more collaboration in that space, which will then lead to more innovation for the consumers, for the end users of the products.
I think that's such a brilliant way to define it. The traditional institutions struggle with time. The fintechs don't struggle with speed, and hearing that dynamic is going to create some interesting plays. And also, Jinesh, I'd love to get your perspective as well, having been at a traditional institution and then kickstarted your own fintech. How this relationship between the two is going to continue.
I mean, I think the traditional players have to adapt, otherwise they will be left behind. You're looking at the generation that's coming through, leaving school, and they're much more tech savvy, and they want things quick and fast. And so I think obviously the good thing about, I suppose, the traditional players is they have big pockets, and so I think they will be smart and look at which propositions they feel like they need to integrate or buy out or partner with to be able to stay relevant. The other side and probably the flip side is worst case scenario is we are in a tough macro environment. It's harder to fundraise. You're starting to see down rounds, etc. So what's really important during this tough time is that the big fintechs that have been successful, the likes of the Monzos and the Revoluts, etc. They need to stay healthy. And what you don't want is suddenly there's a big of a horror show where one of these neobanks suddenly becomes insolvent, and there's a lot of panic, etc. And suddenly you do then see a race away from the fintechs that have done so well back to what's considered the more traditional players that are deemed more safe. Given the balance sheets that they have in place.
Yeah, I mean that would be such a well, certainly have been in being in the industry, hearing that is such a scary concept, and I just can only hope that we get through this as an industry in a kind of forthright manner. Well, I didn't want to kind of focus too much on that doom and gloom, but I think, Jinesh, you were right to kind of bring it up, because we do need to have that introspection as an industry. I mean, some of the evaluations from a couple of years ago were slightly crazy, and now we're starting to see maybe it's not receding, but it's certainly reevaluating, and I think it will be an interesting dynamic going forward. Now, one thing I want to focus on is really having both of you guys on the show here today. There's a partnership between PPS and Sprive, and I want to find out a bit more. It's been a really great success story and a really a happy way to end the show. So Richard, could you tell us a bit more about the partnership, please?
Yeah, no, absolutely. I mean, look, the partnership we have with Sprive is great, and I think Jinesh has touched on a few of those points earlier. I think each party focusing on what we do best is the right way for any of the types of partnerships that we're talking about in the industry to move forwards. Yeah. PPS is a back-end B2B provider, and really we have those integrations with the schemes, we have the licenses, we have the things that a traditional financial institution may have, and really that allows us to live that vicarious experience through partners of ours like Sprive. And for us, it's getting behind things like that, like a case that we can really buy into and believe in, that's super important to us in a partnership. We see Sprive's iOS and Android app, which are, without meaning to blow smoke up where Jinesh, I think an amazing user experience, something that we look at and we go, this is exactly why we partner with guys like Sprive. Your AI, your user experience are amazing. And then behind the scenes, PPS as the partner in this model is able to provide those interactions with the schemes, with the regulators, and really powering that journey through its financial products. So I think, that kind of partnership for us is super key. I don't know, Jinesh, if you want to touch on any of the points there around the relationship that you haven't already, but I think we did touch on that slightly earlier.
Yeah, I think what I really like when we first kind of started working together is how flexible we were in terms of looking at our use case and building bespoke things that you'd never actually kind of supported before. So that was kind of really good to see. And then even once we launched, helping us on compliance matters has been fantastic. But also obviously as regulation changes, but also getting out in the industry. We've been nominated for a couple of industry awards. The Pay 360 awards, and then the Fintech Finance Awards, and hopefully we can win this time.
Oh, absolutely, onwards and upwards on that front.
I love hearing a bit of FF kind of branding within the own the Virtual Arena, guys. Thank you so much for your time. It's been an absolute pleasure having you guys both on, and also a big thank you as well to our viewers. You can catch the rest of the series and much more over at ffnews.com, of course YouTube, but especially LinkedIn, where I imagine you'll see Rich and Jinesh and me in the comments. Guys, thank you so much. I hope you've had a good time too.
No, thank you. Yeah, great time.
Amazing. And
fantastic.
With that, goodbye.